Hi there, now in this video I'm going to be teaching you some of the most popular and important technical indicators out there, where you can find them on the MetaTrader 4, that's the MT4 trading platform, and why they're important to us Forex traders. So come on, let's get started. So first up, we've got the trend following indicators. Now, trend following indicators typically are used to determine the trend. Are we in trend or are we not in trend? And the most commonly used technical indicator for trend following, of course, are the moving averages. Basically, moving average looks at price over a certain period of time and seeing if the price is going up or going down. And of course, if the prices are going up, then of course the average will be going up. So moving average, you can have exponential moving average or simple moving average or so forth. Okay, so that's the moving average. You've also got the moving average, convergence and divergence, often referred to as the MACD. If you heard the word MACD, it doesn't talk about, not talking about McDonald's hamburgers, it's talking about the moving average, convergence and divergence. It's basically looking at two moving averages and seeing are they diverging or are they converging. Basically the MACD is a good one for trend following as well. And then you've got the ADX, basically tells you are we in trend, are we in an uptrend or are we in a downtrend? And you've got the average true range. Basically does what it says on the tin. It basically averages out the range of a particular trading entity over a period of time. So if you're looking at the hourly price action, it looks back over say 14 last hours and averages the range, the difference between the high and the low. So we use the average true range in conjunction with trend as well. Now these indicators are lagging indicators. That basically means they look back at price, what's happened in the past. So that maybe is a disadvantage. They're lagging indicators. Another form of technical analysis we use are the oscillators. Now the oscillators basically are not lagging. They are basically looking at the future, giving prediction of where prices may go in the future as opposed to what's happened in the past with the lagging indicators. Oscillators typically range from a period of overbought up there to a period of oversold down here. Typically traders use the 30 and the 70. So anything below 30 is deemed to be oversold, and anything above 70 is deemed to be overbought. So the first one, of course, is momentum, and that is an oscillator. It shows us where the momentum is. Is the momentum likely to start moving back on the other direction or so forth? You've got the stochastics, a very common one that traders use these days, a little bit more technical than this short little lesson. You've got the relative strength index. A lot of you will see the relative strength index. A lot of the analysis you see on all the news wires talks about the RSI being overbought, oversold. So we'll talk about that one as well. Again, it's an oscillator. It's basically a line that's going to go up and down, ranging between certain levels. Then you've got the commodity channel index as well, referred to as the CCI. So I think what you need to take from this is the fact that these are forward-looking indicators as opposed to the lagging indicators. Typically, these are not going to be placed on the actual price chart. These will be below as a separate indicator as opposed to these moving averages, which will be put onto the price chart as well. Then you've got the miscellaneous technical analysis that we use, various different indicators. Of course, I'm not going to be listing them all here. You've got support and resistance. Again, support and resistance. Support is there where sellers turn into buyers and the markets find their base. Often we'll find the prices retract or move back up once it finds that support level. Then of course you've got the resistance, which is basically at the top of a market, when markets basically seeing their buyers now turning into sellers or meeting a wave of sellers pushing the price down. Support and resistance. Very common form of technical analysis. I love using support and resistance. It's one of my favorite forms of TA, technical analysis, that we use. Then you've got the pivot points. Pivot points actually stemmed from the trading pits many years ago. Many years ago, we didn't have all the computers and so forth when we were in the trading pits. We had a calculator. We looked at certain levels. We looked at the high, the low, the close, where it opened and so forth, and we were able to work out where the pivot points were. They are actually called the floor traders pivot points, and that's another form of technical analysis we use. Again, more about that later. You've got Fibonacci. Fibonacci, is it a myth? Does it have any relevance? We discussed that as well. Fibonacci basically appears in all walks of life, from the patterns on the shell to the constellations of the stars and so forth to the ratios on your hand. Fibonacci levels are a form of technical analysis that a lot of traders love to use as well. And you've got pure price action. I'm a pure price action trader. I love to look at the candlesticks. I like to look at what's happening now in the price at this moment in time, looking for patterns. You've seen certain candlestick patterns that can actually give you good clues, indications of where prices may want to go in the future. Pure price action looks at price as now, as where it is at the moment. So they're not lagging and they're not looking for potential. They're just telling you what's happening at the moment. And if you can understand what's happening to human behavior, human mentality, human action, you can look at that on pure price to help you predict where prices may go in the future. So these are the three subsections I put into technical analysis. So what are the pros and cons of technical indicators? The pros first, it removes subjectivity. As I say, when you're trading, you should always have reasons to enter a trade. Any trader that's sitting there just looking at a chart and saying, I think it's overbought, I think it's oversold, I think it's going up, I think it's going down, I think this is going too high, this is going too low. There's nothing in that. There's too much subjectivity going in there. Having technical indicators basically removes that. If you've got a strategy that says this must happen before I do this, well, you can see that. So it removes the subjectivity. You may say, I want to see the 10 moving average cross over the 20 moving average. That gives me an indication that I want to buy or sell or whatever. So it moves. You can actually write these rules of engagement down using these technical indicators. When something happens to an indicator, you will do that. It allows automation as well. A lot of traders have strategies that they have automated. So they've got stochastics, they might have a moving average and so forth, a MACD. They can get that coded up very simply these days to save all the screen time. It will send you an alert when your rules of engagement align. And then you can go and place the trade. You can actually trade automatically with automation as well. Not that I'm too fond of that myself, but you can. But it allows for automation. The cons, paralysis from analysis. I've seen it so many times in the past where traders are just putting on indicators after indicators to avoid that loss. You may have seen my lesson, my most important lesson I think I've given in my trading education career, and that's the cycle of doom. Traders are always putting on more indicators to avoid those losses. So paralysis from analysis, you've got so many things going on in the chart. At the end of putting all these indicators on, you can't do anything. The chart just looks a complete mess. We'll look at that in a moment actually. But paralysis from analysis, there's too much going on. And the holy grail mentality. A lot of traders think if I just put this on, this stochastic on, or this MACD on, then I have got the perfect strategy. This is the perfect combination of indicators, and now I'm gonna give up my day job and just trade for a living because I've got the perfect holy grail strategy. So people are always looking to get that perfect set of indicators to trade. That's the holy grail. We know, folks, that doesn't exist. So there is a tendency by using these indicators, always looking over the fence to look for that magic strategy. Get it, folks? It doesn't exist. Let's just jump on to an MT4 chart now, and I'll show you exactly where you can access these indicators on, say, the trading chart. Okay, so here you've got a typical trading platform, MT4 trading platform. We've got 4 charts on up here. Let's just have a look at this one first here. Now this one here, you'll see price action at the top. We've got these moving averages in here, different colored moving averages. Below here you've got the stochastics. Remember, that's the oscillator. Anything above 70 is considered to be overbought. Anything below 30 is considered to be oversold. Also lines crossing over. Also here we've got the MACD. So the MACD again typically will be below where the price action chart is. You can add more indicators in here very easily by going to the insert section at the top. You'll see the section there where it says indicators, and there are the different indicators. You've got the trend following indicators. So if you click in trend, you'll see all the different moving averages and Bollinger Bands and parabolics and so forth. If you go to the oscillators, you'll see you've got the moving average oscillator, you've got the relative strength. So we might want to put in a relative strength indicator. Ask you for your settings, put your settings in. Another little chart will come up at the bottom there, or giving you the RSI. Remember, anything below 30 or below 20, depending what your settings are, would be considered to be oversold. Anything above 70 or potentially 80, depending what your settings are, would be considered to be overbought. So you can add as many of these indicators in as you wish. You also put in other things such as the Fibonacci levels. You've got the Fibonacci retracements, where you can look to see maybe a Fibonacci retracement by looking at a high to a low. And of course, you've got other things like the GAN and the channels and trend lines and so forth. You can put in trend lines where you might have a trend line going in there or something like that. Or you might have had one going in there. So you basically get the idea. So that's basically where you'd access the technical indicators. I say there is so many different technical indicators, it can be quite tempting to just keep adding and adding more as you go. I would recommend you maybe use just a couple, maybe 3, but don't get yourself too carried away with them. So that's basically technical analysis, technical indicators. So make sure you watch out for the subsequent video lessons on these different indicators. I have just picked a handful of, I think, the most important ones. If there's some there that you want covered that I haven't actually covered, just drop me a line and I'm sure I'll be able to put something together for you. I'm pretty versed on pretty much all of them. One thing I will say is do try to avoid this type of setup. I have seen charts before with traders coming to me and showing to me, look, is this a buy? And I look at the chart and I think I can't even see where the blooming price is. Look, you got clouds, you got alligators, you got Bollinger Band in there, you've got your stochastics, you got your gators, your RSIs and so forth. You can't even see where the price is. So make sure that you don't just clutter your charts with so many different indicators that you can't even see where the price is. Hi there folks, hopefully you enjoyed that video. Hopefully you learned something there as well. Now don't forget to follow us on all our other socials. I'm always leaving tips and tricks on there as well. Don't forget to give this video a like if indeed you liked it. Give me a thumbs up. Don't forget to subscribe to the channel and hit that notification that will alert you when my next video has been released, which will be very soon. See you there.